Okay, so what we've done is we've covered a few examples just kind of on the starting, just kind of on a starter level for specifically the entry time frame, but we're going to incorporate the validation and the context in a second. So that's part of the EVC. What we've done so far, as a lot of you should understand, is we've basically looked at the blueprint of how prices tend to deliver, right? Through stage ones and stage twos, in the event that they're actually moving in a direction. And in the creation of a potential stage one, we get these MBs and we get the MB setups or demand formations to continue a potential move higher. So before we now kind of take a step back, so you'll see I kind of wrote something here. Before we take a few steps back, and basically propel you infinitely forward, what I want to do is I want to draw to a kind of real example of a market that I personally traded, walk you through just a few easy thought processes of what's going on there, kind of make it harder before we make it easier, and then jump into a teaching that is going to throw everything together. So right now, I expect that what I'm about to do to be a tiny bit confusing. It's not supposed to be insanely confusing, but it is meant to be a tiny bit confusing because, as I love to say, and as you will learn from me over and over and over again, the purpose of or being confused is oftentimes a good thing because it means that you have things to learn, you have things to get better with, right? So just keep that in mind. Even though thus far everything that we've kind of went over and taught should be somewhat consistent with the overall frame of reference of what we're doing here. And you should have a generally decent understanding about how we're trying to approach markets. So what I'm going to do is I've opened up TradingView here. Now, there may not be a section on this just yet because the recording of when I'm recording these things and as I'm putting it together is going to be all over the place. But you should and will have this thing added to your actual charts on TradingView if you're part of the team, which you're watching this because you're part of the team. So it should be very easy to get this. Now, what I will say, and now I'm going to write this down for myself, is that if you do not have this still, if you're just going through this and you don't have this on your chart and you don't know what this is going to be video one in the set up section. Okay, so what you can do right now is you can actually pause this video and go back to video one of the setup section just to quickly understand how to throw this onto your chart. And then very simply, if you copy the general settings I have here, which by the way, down the line, you'll learn what a few others of these things do, and you can add them or remove them from your charts or from your trading as you see beneficial. You can set this up as I have it here today. Now, as we're here, this is NVIDIA, right? So again, going back to the idea of any market whatsoever, in this case, we have NVIDIA here. This is something I personally traded. Any market, any time frame. And for today's example, what I'll be doing, as per the examples you've seen before, we'll be using an entry time frame of 65 minutes, basically a 60-minute or 1-hour chart. The reason it's 65 minutes is because for stocks, which is this is a stock, it's an easier time frame for just looking at candles. But it's not something that you should worry about or get afraid about, okay? Now, I want to really, really zone in on the key fact that it doesn't matter what your entry time frame ends up being. There are, as you all know, advantages and disadvantages in terms of using any specific entry time frame in accordance with your system or the assets you're trading or whatever you're doing, right? So that's already kind of taken care of. Just remember that because we have members here that operate on entry timeframes that in some cases are much higher. You just don't hear much from them because, well, they're holding for much longer periods of time and they're not just sitting there constantly taking a trade after trade. And we have members that have become profitable, traded, made money on timeframes as low as the 1 second, 5 second tick charts, 1 minute charts, over and over and over again, all over the place. And I used to trade those timeframes too. So I just want to remind you before we get any deeper that I've done it all. Okay, for the most part. So yes, whatever time frame you're thinking about entering, you are correct and you would be able to do so. Okay, so in this case, just for today's video, for this exact video that you're watching right now for this teaching, we'll be using an entry time frame of a 65 minute. Which means that if we follow the blueprint that I provided to you, if we multiply that by an average of around 6, what you get is about, so what I'll do is I'll just take 65 minutes and multiply by 6. What you get is about 390 minutes, which divided by 60 is about 6.5 hours. So about 5 hours, okay, 6 hours, whatever you want to call it. We can make it 6 hours. It really does not matter. So I'll go to a 6-hour chart here. There you go. Either way, it really doesn't matter because you can see the charts for the most part are the exact same whether I go to a 5-hour or 6-hour, which is also kind of funneling into the idea that the timeframes we're actually trading don't matter whatsoever, okay? And then, of course, the context, if we were to multiply that by 10 for our context, we would get our C, times 6 gives us our V, which is our 6 hours, and then times 10, which gives us our C, becomes a 60-hour, or 60 hours over 24 hours, right? So how much is this? It's about 2.5 days. So basically 2-day or a 3-day chart, basically, okay? So this is the general blueprint approach that I would fundamentally use if I was trading a system that was using this as the entry time frame. Now, of course, so far you haven't learned what to and how to look for the V and the C. And what I will offer you right now and what you can write down is that the V and the C are simply a fractal representation. And what you'll be looking for is a fractal version of what you look for on the E, for the most part. So you can write that down if you want right now, but you'll see more examples later. But I want that just to linger and exist in your head for now, because later on, it will become a lot more understandable, okay? Now, what we've done in the last few videos is we've really dived into the understanding of stage 1s and 2s, whereas if a market is delivering or is going to deliver, let's say bullish or whatever, and it's delivering in stage 1s and 2s and stage 1s and 2s, it's likely going to create new opportunities through flush outs, which are accumulations, okay? So what I want to do in this video right now is I want to quickly go over to this chart on the 65-minute chart. So this is a 65-minute, this is the idea of an entry time frame, and I just want to show some examples in a more back-testing light of this right here. So exactly what we've learned already, where for the most part, we see a move, right? That's kind of a stage 2, or we have some kind of delivery of a stage 1, stage 2, stage 1, stage 2. And those stage 1s and 2s lead to flush outs that lead to brand new MBs that lead to new deliveries. Now, what I'm going to do is I'm going to throw on a few random trades just here and there using these rules of MBs just to try and catch a trend on something that I know personally has trended before. So NVIDIA, again, as I'm saying right now, this is something that I know for the most part trends. I don't know if the trend starts now. I don't know if it'll start way, way later. Maybe it'll come down first and then go. I don't remember. I replayed this like a while back, and I was going to make a video on it today and walk you through a simpler thought process of what you've learned so far. So the main thing we're looking for is this stage 1 and stage 2 delivery, these anticipation of the high or low rules, these flush outs, right? And the reason that I'm doing it in this way is because 1, I want to show you the example, and then 2, I want to cement an understanding permanently in your head, okay? So that's where everything on the chart that you see is coming from, right? Now, what's cool is if I go to the 6 hour, one thing you'll notice, so this is something to notice, not something that's being taught just yet. Something to notice on the 6 hour, which would be my validation time frame, as you can see by this little area right here, by this little thing right here. If you look at this, right, we're an overall accumulation, and on top of that, price, for the most part, is moving in some kind of stage 1, stage 2, stage 1, stage 2, stage 1, stage 2, stage 1, stage 2, right? Or the expectancy is to continue moving in the stage 1, stage 2, stage 1, stage 2, because it's what's been proven to, for the most part, be happening, right? So I just want you to keep an eye on that because, again, like I said before, the market is a fractal of itself. So once you have a time frame template, what you'll be doing is you'll be looking for kind of an ongoing movement that you can then capitalize on for your entry time frame. So I just want you to keep that in mind as we look at this, right? Because overall, before we go anywhere lower, you can already see that the general, let's say, condition of the market is already in accumulation, right? It's not like we're starting to look at this way down here and just predicting this run up. This is something that is proven to be, a bigger mover, and it's something that is proven to be in accumulation. Okay, so I just want you to keep that in mind. And honestly, like if we go to the 6.5 hour, like I said, that will basically put us on a day. So, this is really what it looks like because I usually use the daily for my validation. So this is what it actually kind of looks like. So it's not as choppy as the 5 hour or 6 hour look. The reason this happens is because some of these 6 hour candles are like 30 minutes or 5 minutes. So that's why it looks a little bit weird. But nonetheless, just keep that in mind. So if I go over to the 65-minute, right, something that I'm now aware of as a very, very fundamental building block of how trends actually function is that when a stage 1 begins and then a stage 2 comes from it and a new stage 1 happens, on average, if a move is going to be created, you'll get some kind of accumulation. You'll get some kind of flush out, right, just like this, and then you'll get a setup. Sometimes those setups will create buyable MBs. So I'll go like this. They'll create some buyable MBs, and we'll stick to our consistency of using like a darker color for the MBs for you guys. So you get some MBs, and then price may go, create new MBs, and then keep going. For the most part, because of what I tend to look for, I'm going to be primarily looking for the entries of MBs that kind of happen just coming out of an area. So again, all of this, as I talk about it, should be a little bit confusing. That's perfectly fine. You're not meant to be a professional trader just yet. You're not meant to fully understand how to do everything on your own with no issue. You're meant to go through a period of improvement and of asking questions and of getting better. And that's exactly what this is, because again, we're still laying a foundation for an overall system. So as we look at this, right, what I'd be waiting for now is, again, some kind of flush out. So hopefully, this is kind of a flush out here. And what we should see happen from a flush out is an MB might build, and then another MB may form on top, right? That could be an opportunity for an entry. So that's exactly the kind of trade we'll look for, and then we'll look to take it. So in this case, it just fails down, and the same thing happens. So this is one of those flush outs that's happening right now in an overall potentially bullish market. And through a flush out, because we're aware, right, if we look at this as a stage one, this is a stage two, this is a stage one, then we're aware that a stage two could come from this move. And at the moment, based on what you've learned over and over and over again, through a stage one will oftentimes come a flush out, and from the flush out will come new MBs that begin to support the price higher. So if we wait now for an MB to form, which doesn't happen, just kind of breaks down, and now we're starting to get some like MB action here, where prices kind of take out this high and then build up this little high here. So you can see this is building an MB from here, and now this is building an MB here. This is a trade that I'd be willing to take. So again, do not try to use this as a thing to like be a full-on trader just yet. I just want to introduce, also I'm going to turn on the ATR value here. I just want to introduce the idea that you've already learned of overall price delivery. And again, you have the anticipation of the higher low rule being met here, you have it being met here, and you might even notice, as per the setup video that you used to hopefully get this now, and it looks like this may be on your chart, you have some low, right, this low specifically here being taken out. This is known as a potential reaccumulation, or also as an anticipation of the higher low rule, in this case on the entry time frame. So as price flushes out, as price is in this stage one, as we anticipate the potential of a stage two, there's MBs being built now, and we expect that now if we get tapped in, it should move higher. So that's exactly what I'm looking for here. Let's see if we can get tapped in. But I had coffee, I don't. Right, and then price just fails down. And this is beautiful because now you're starting to see the first moments where, even when there's a setup that might be occurring, it doesn't mean you're going to actually be getting entries, nor does it mean you're taking wins, right? A lot of the time, you'll be sitting around doing kind of nothing as a trader in the event that you're trading any given time frame and you're looking at action, right? Most action is action that you don't trade, and then sometimes it's action that's worth trading. So just keep that in mind. So again, there's nothing happening here. This is still in major flush out, right? So we're expecting this stage one to hopefully go into and start some kind of stage two later, right? So when this happens, right, what we've gotten used to is that we might be in a move like this that might stage one and start a stage two, right? We might be in a move like this that might be in, this move down and then start a stage one, start to move higher and then start making MBs. We don't know that though. So this is where, I'm just introducing you to the idea of, we have all these rules met for a potentially bullish market, but nothing is setting up, right? No MB is coming from this, no MB is being created. So I'm just waiting at the moment for that to happen. And then all of a sudden you get this little move higher here, right? This move higher starts to validate some MB, this MB here or this MB here. And then all of a sudden another MB begins to form just under all this area. So this is actually, an example, a first time example of an MB that could be an opportunity to buy. So I'm going to put this on here because, like I said, all I'm doing is I want to take some of the general things you've learned so far, right? So potentially stage one, stage two. This could be a longer term stage one that's going to start at stage two now, made up of smaller ones and twos and ones and twos and ones and twos. So that's how you think about price, right? So I'm going to do like a few of these trades, maybe like 5 or 6, just to get this point across. And then I'm going to simplify a few things for you. So we'll see if we get tapped in. So price does tap us in, right? So this would be where you get tapped into the actual trade itself. Now, again, I'm going to use some of my own management rules to actually manage this and see what happens, because I just want to get this point across. But this is an MB that theoretically would be a buy stoppable one to take, okay? Now price comes down, I would have just easily taken you out. So I'll record that loss for you guys so you can see that. Because again, as we're doing this, as I show you like real life examples or whatever of stuff that, I might have traded, could have traded, I want you to get used to the fact that, losses are not this bad thing whatsoever, the way that a lot of people have been taught online. They're actually really good. It's about if you understand what the purpose of the loss was. is honestly what it comes down to, right? Because if the purpose of the loss is to make your winners work, because that's what we do as traders, then you take losses in style, right? Because you don't care, because you realize that it's a good thing. So again, we have some kind of stage 1 happening here, and we expect that likely a stage 2 is going to come out of this move. Just like that, right? A mini stage 2 starts. What you start getting is a stage 1 into stage 2. And now you expect that there could be a stage 1 into hopefully a stage 2, right? A stage. So now you start that stage 2 that doesn't really give me an entry. So I kind of missed this, right? There's an opportunity, of course, inside of here as well through an MB. But you're also going to notice, and the reason that I want to do this as kind of a live example in front of you and walk you through my thoughts is because I want you to get used to the fact that also when you take trades or get stopped out or don't take a trade, you'll also miss trades that do start moves, and that's perfectly fine. So again, now what we have is if we follow the same kind of rules that we've gone through so far, is you have a stage 1 into a stage 2. You probably get a stage 1 is what we'd expect, maybe through a flush out, right? Because we've already met the anticipation of the higher low rule on some level. So we know accumulation is present. We want to see that happen now up here, or maybe move down. And then again, it can start a new move higher. And that could be an opportunity for an entry off of an MB, right? So this is a phenomenal flush out, right? And when I see this, I'm already expecting based on just everything else that I'm looking at. So I'm also paying attention to the moving averages here, which we haven't learned about yet, but that's okay. Because again, like I said, at the preface of this video, you're meant to be a little bit confused because over time, the things that you're seeing me do and seeing me think about will become easier to understand later, right? So again, as this is happening, right, this is a flush out now in a market that's starting to turn up, that's showing bullishness, that's doing the stage 1, stage 2 delivery, that on the higher time frame was bullish. Remember that. It's very important because that's how an EVC works. And we'll talk about that later because we want to see alignment of EVC. So this is a flush out, right? Price starts kind of going sideways and then starts building up this MB through like this high right here. And then after that, it actually looks like it's building up an MB right here. So this is another MB that I'd be willing to take through the buy, just like that. We'll fix this up. Again, looking to take an MB, and we'll see if we get tapped in. So it does tap us in. So again, this is another MB-based entry, where very simply, price went in a stage 1 into a stage 2, right? Because that's the general thing we've learned so far. Stage 1, stage 2, stage 1, stage 2, happening across multiple kind of timeframes or ideas. And from there came a flush out. In this case, this flush out, this move down, also did meet the anticipation of the higher low rule, but it's not necessary specifically for that to happen. And then from there, it started to build MBs, right? It made an MB here. It's starting an MB right now. So the expectancy is that price is doing this to hopefully validate this overall forming MB. And as that happens, we should be able to get ourselves into some kind of trend. So price starts to move higher, falls down, starts moving higher. Now at this point, I would assume that whatever demand formed here, because remember back to the beginning of the material that we started going through, this is a down move of some sort. So if we color that black, just like this is a down move of some sort followed by an up move, right? And now we're assuming that across timeframes, this up move is likely complete across some time frame for this formation. So the reality of this move is that if demand is validated, price should not have to return here, because if true demand is there, areas that sell off will act as new buying rather than come back to the prior buyers of actual demand or of real demand, of validated demand. And that came from that MB. So what I would do here, right, is I would take complete risk off. And now you're learning about the idea of management. So again, these are all mini introductions to the things that you're actually going to be learning through the template of this course as you're going through it in the portal material, and of the tools that you're using and have access to now, right? Because I want you to start getting familiarized with, what is price actually doing and what does it look like to trade it potentially live. So what's happening now is, you'd have this basically a guaranteed 0 RR win. And what I'm just going to let happen here is if it wants to make a trend, it will. Otherwise, I'll just take a break even on this thing. I'm not even going to force anything. What I'm going to do is very simply use basically these lows here as an overall stop, and I'll use the 2 most recent. So basically, if I was to use it now, the stop should be here. So we'll wait until one forms, and then we'll move it up. Just as a very, very simple basis for management, because theoretically in a trend, in a delivering trend, what's going to happen, if we can find examples, right? In a delivering trend, those are going to consistently grow higher and higher and higher until they inevitably stop you out. And by the time you stop out, it might be the end of a move for a new longer term stage 1. So that's all we're going to be doing. We're going to be getting into moves and then following that rule, just for the sake of today's video. Now, again, These are also examples and ideas that you can already start to incorporate in your own trading plans, in building out your own trading plans. But that's all I want you to be aware of, because again, right now I'm kind of showcasing some simple ideas of stage 1, stage 2, flush out, entry. Okay, so see what happens now, right? Beautiful flush out, right? So again, stage 1 into stage 2, stage 1 into stage 2, stage 1, right, comes through a flush out. Now, usually I like a little bit of a deeper flush out, but this is still a flush out, and we can expect this now to start at stage 2, or maybe go sideways more and then start at stage 2. So yeah, it just moves higher, right? And you can see as we're looking at this, the Ment Effects indicator, which you all have access to and now can access and set up in the first video of the setup section. Okay, you can see these lows begin to go higher and higher, and the most recent low is this one, and the one right before it is this one. So I'll simply take my stop and move it to just below that, like so. Okay, as an example of this. And now we're in a stage 2, and we're hoping that basically this delivery of stage 1 and stage 2 will keep us in the move. And if it doesn't, okay, so it doesn't. If it doesn't, usually by the time we're out, the next flush out, what should happen is a flush out, should lead to another opportunity in the event that this market's going to keep delivering. So this is an example where, again, it's not even a big winner, right? This did not make a move at all, right? And if anything, like it's minute. It's non-existent. If you think back to some of the examples we've looked at before for trend deliveries, right? We're looking for moves that are going to make bigger trends. Now, over time, you may change up your rules or what you're looking for, or your risk to reward that you're looking for, basically how much you're going to take out of a trade. But at the moment, what I'm basically trying to get your mind to see is that even with a very simple system, a lot of you can start to see beneficial or positive return. Now, again, not financial advice of any sort, but I want you to keep that in mind, because then you can improve that system to get a lot better. So this would be like a plus 2.38. So we'll keep going for a little bit, because I want to really bring home this idea of stage 1, stage 2, stage 1, stage 2. Now we're in, again, what we would assume another stage 1. And again, a flush out stage 1, which is what this is right here, should lead to some, as we saw before, MBs, and new opportunities for entries, right? Because that's what tends to happen in a delivering market. You get the stage 1 into a stage 2, a stage 1 that sets up MBs to make a stage 2, a stage 1, a larger one, that sets up MBs to make a stage 2, over and over and over again. So that's exactly what my eyes are going to be on now, right? So you get a little bit of, so you see how here it pauses, and again, I'm expecting already for this to start a move like this, and it just falls off. The reason that I'm kind of incorporating and showing you all of this in like one video, and we're kind of jumping ahead to then go back again, is to really cement in your mind that a lot of us, including myself, don't actually know what the next move is going to be, and a lot of the time I'm actually very wrong about what I expect. The only difference is that I don't take extreme losses or dumb trades or emotionally upset myself or anything along those lines when I am wrong. The problem with most traders is that they do. They take it to heart. Right, but the reality is, if a move's not ready, it's not ready. So this is still a flush out, and it's happening beautifully because, again, right, you had the potential stage 1 to stage 2, a stage 1 that is now kind of failed. This stage 1 here failed, but it started making new 1s into 2s, 1s into 2s. Now you're maybe making a 1 that's kind of failing. So again, what we expect when we see that, as we saw in the older examples that I've shown in some of the portal material, is probably stage 1 to 2, a 1 into 2, over and over and over again. So if that can happen, then it's going to produce an opportunity for entry. Otherwise, there's not going to be much to do. Yeah, so price just kind of comes down very heavily, right? Comes down very, very heavily, which is perfectly fine. I'm going to take a look at my 6 hour, which is my validation, just kind of cement where I am. Yeah, so I'd probably ignore some of this action. I'd wait for this to come above, start kind of getting above all of this area. So I'd ignore all of this, as you can see, very easy. Start getting above this, and maybe even start going sideways here for a bit. But now if I go back to the 65-minute, right, you can see we skipped a lot of action. And what happened is, in a market that, again, we're assuming is bullish, because don't forget what I have taught you guys to do, or what I'm teaching you to think about, is if you know, in general, that the composite operator wants to move price higher, right? If you have a general understanding about why that may be the case, then those are the moments you are going to be waiting for as a natural trader, which is what you're seeing happen right now, right? We were waiting for those moments, so we skipped all of the action that doesn't matter. And then from there, we once again saw price go from a stage 1 into a stage 2. So now we're in a beautiful stage 2. But from what I've taught you so far, we don't have a stage one that's operable, right? We don't have one to operate on to actually take an entry. So we're going to wait for that kind of thing to happen. So what we want to see, right? You can see price can go away from me, doesn't matter. What I want to see is a flush out. Once again, right? A move that just breaks down heavily. So this is all stuff I can't do anything with, right? That'll happen. This is perfectly fine. I want to see a flush out that's going to give me some kind of opportunity for an entry. And I'm going to look for the same thing you saw here. Otherwise, there's nothing to do, right? So all I'm doing is I'm looking at this as stage one, stage two, and I'm expecting a stage one, right? Think back to what you saw us do. Think back to what you saw us do like here, right? A big move can happen, and all you have to do is wait for your stage one to occur, right? And that stage one or stage two can be smaller or bigger based on kind of what you're looking at. But right now, just based on the examples here, based on just what we've done so far, based on just the entry time frame kind of, we're looking for ones and twos to lead into a flush out, anticipation of a higher low for the most part, which is kind of already being met, right? Through this low, some kind of anticipation of a higher low, to then start a new move. So this is like a mini flush out, right? We'll wait for something more pronounced. Why not? So we might miss a move because of that, but that's okay. So there we go. We get a nice flush out, right? It's starting to meet some level or multiple levels of the anticipation of the higher low rule, anticipation of the higher low rule, right? It's taking out lows. And once again, through a flush, within an overall bullish market that went from stage one to two, from one into two, we assume that if we can start to put in bullish MBs and validate demand, we should be able to get ourselves positioned for an actual entry. So we wait, right? You kind of get this initial MB out of whatever this was, right? So you get this initial MB1 over all this, and then you're building this MB here. And once again, just like the other examples, this is an area where I would gladly throw on some risk to see if we can take out this high for a buy, to get into a trade, to see if we can get another potentially running market. And you can see, once again, price would just fail down, so those get canceled, nothing else happens, and this just becomes a larger flush out. So notice how, as we're doing this, you should be learning and kind of witnessing that, yes, it's true in hindsight, when we're looking at a market, like a photo of a market, and I'm just drawing it on, it's very easy to see, oh, this is where the stage two began. This is where you would have traded. But also what I want to do is I want to show you how even in the initial points of watching a given move, you don't know necessarily when the stage one or stage two is completed or not completed, or if it's ready or if it's not ready, because it can happen in a large area of space. But what's cool is other rules, like the fact that you understand, larger flushes can happen. So you can maybe allow the flush to happen. You also understand that MBs need to come in for the price to start to prove that it wants to make a potentially bullish push in the case of a bullish market. All of these things, right, begin to add up as almost barriers to not losing money, even though you're wrong, which is what's happening right now, right? I expected this to go, and then it fell down. This is still a big flush out. So I would wait, and I would wait, and I would wait, and I would wait, because it's still a flush out. And again, as this is happening, all it's doing is it's meeting some kind of anticipation of the higher low rule, right? And then all of a sudden, you get this MB push. You have kind of this MB push that comes above all this. So now if we can form some kind of MB, that should provide an opportunity for an entry. So we'll see if we can do that. So you can see we kind of start making so now we have like an MB within an MB. So maybe if it pauses now, kind of like that, this is a fine opportunity for an entry, right? Just pausing a little bit. I'm happy to take MBs even through mini pauses. It doesn't always have to pull back. It doesn't have to. It can. It doesn't have to. So this is another trade that I'd be willing to take as just an entry. Oh, wow. What time is this? Okay, so this was into the next day, which is perfect, right? And then again, what I'm doing, just like you saw here, is I'm going to allow, hopefully, for whatever demand is forming here to get truly validated, which I think we maybe give it a little bit more time. Okay, so in this case, we didn't get to move to break even. See what happens. Looks like we get to take a lot. Okay, it doesn't come down. Very good. So, this MB here that we're kind of looking at, and you can see we can draw it from any high. We can kind of start here or here or here. This one could still be forming. So the way that I'm thinking about this visually is that you have some kind of down move, right? Don't know exactly which one it is or where it is. But what I do know is you have some kind of down move, which would be this move here. And what we can do is we can make that black. And then you have an up move that started, right? It started coming up here, but then it came down. So we know this up move or potential up move is still forming. This is what it kind of looks like right now, right? So we're expecting that at some point, hopefully, in the event that this is the correct let's say stage 1, stage 2, new stage 1, and this is going to start a new stage 2, we're looking for these MBs to become demand validations of a higher time frame at some point. So maybe it'll happen up here, and then it'll basically this time frame of the move will close, and then we'll be able to move to break even. Otherwise, we might be wrong and it'll fail through, and we'll take, let's say, another loss. But as this is happening, we can also potentially see new setups come about. So we'll see if that happens. So, okay, exactly. So what you're doing now is you're forming a new MB, right, within MBs. And now probably price will pause just like this, right? Because now it's forming another MB. So again, you have an MB, you have MBs being validated once again, or potentially validated. So this would be another opportunity for an entry. And in this case, what you could do is you could enter this with your stop at the stop of the last one. So this is some management-based stuff, which again, we'll go over as you show up to webinars, ask questions in webinars, because these are important things that you will learn about, that you will do for yourself, and that we'll cover in other sections, more detailed sections of the course. But this is another example where you have a stage 1, right? Some kind of stage 1, and you're entering into the presumption of the stage 2. So notice also as we're doing this, I'm not going to take this one just because I want to keep it consistent with just one trade at a time. As we're doing this, what you should also be noticing very clearly is that, if you miss a trade or don't get a trade, there are actually, funny enough, oftentimes multiple opportunities for an entry, because there's not just this one moment, a special moment where everything makes sense, but there's a buildup, right? It's an accumulation after all. Right, so again, you're now seeing the general acceptance of stage 1, stage 2s, stage 1's building stage 2s, and then within those you have inside stage 1, stage 2, stage 1, stage 2s. Now we're in stage 1, we're expecting a stage 2. And this is where this trade right here came from. So notice how even if this trade took me out, right, for any reason, because I don't want you guys sitting here going, he got it right by the tiniest bit, but how could I have done that? It's so crazy. I don't care if that was a 0 or it acts as a -1, because I would then follow up the move if it wants to continue the move. Right, so already I want to start distilling and destroying a lot of the potential prior opinions you might have had over like losses or taking losses or being wrong or getting it wrong. You've seen it firsthand just today in just the current understanding that you've developed. So basic stage 1, stage 2s, flush outs, MB buildups from flush outs, and hopeful continuations. Just from that and executing from that lens, right, I have gladly taken trades that got canceled, taken trades that ended up being completely wrong and just went down, taken trades that have been losses, and taken trades that have been winners, and taken trades that are at the moment doing nothing. That is vital, because when you start to see that firsthand, that that's just how trading works, you start to think less about necessarily the wins and losses, and you start focusing more on edge, which is also, part psychological. So that is why I'm delivering that information to you right now, because, you made it this far in the portal, even though it's still kind of the beginning of it. And now this is a more longer form video for you guys in the portal. You are now seeing kind of what it's going to look like to be a trader, right? So again, let's just let this thing do whatever it needs to do. So we're assuming that MB is forming. Now I would say probably at this point with this big candle, as that happens, whatever we entered here, so let's assume there was like this down move that we entered, whether it's this tiny one or this big one, right? So right now what I'm doing is I'm looking at, either you're looking at it as this is a down move or this little guy here, right, which technically failed, and then there's a new one forming, so we're going to use this one. So that one, right, that down move was present, and when this up move here never actually formed that demand validation, but we're going to assume that this close right here on some time frame probably validated demand. So if demand is validated as per the material in the overall members portal, and as you understand what true demand validation, accumulation, all this stuff looks like. And once we have true demand, price goes, all the fun stuff that we've done a few times now within the overall picture of stage 1s and 2s, stage 1s and 2s, entry through MBs, right? Because remember, all we're doing is we're entering through these MBs. We're entering through these MBs. We're entering through these MBs as they're forming, right? In a market that we assume is going to be potentially bullish. This brings us to an opportunity to make this trade an overall break even or a 0, right, in the event that it comes back, and a potential winner in the event that it starts a potential trend. So now we'll let it do that. So again, it goes stage 1, maybe stage 2. I'll go gray. And we'll make this. There we go. Right, so now we're assuming, once again, that these stage 1s and 2s are delivering. We assume the stage 1 started to stage 2. Stage 1 is probably going to start at stage 2. And within that, we have the 1 and the 2. 1 and the 2. We had this 1 and the 2, and now we're going to assume we're going to go through a 1, 2, 1, 2. Hopefully move higher and higher and higher. And in this case, because again, I'm just trying to do it as simple as possible, not walk you through all my management rules, we're just going to use the two most recent lows of this indicator, which you all have access to. And you can set it up, like I said, the same way as me. And you can also get access to it by watching this setup video in section 1, or in the first video within the setup section. Okay, so we wait. Now we know the next step is likely a flush out. That's like a mini flush out, and that's a flush out that could be traded by some people. Nothing wrong with that. Move higher. Mini stage 1s and 2s. So now again, another flush out, which is another stage 1. We expect it to hopefully move higher into stage 2. Right, here's your flush out. So again, another flush out. This might be an opportunity for another entry because this is a stage 1 now, right? You have a stage 1, stage 2. Stage 1, again, when is the stage 1 going to end? I have no idea, but I know this is likely to happen. And everything else at the moment that you might have not learned about just yet, so I'm looking at some of the moving averages here. Everything else here is lining up quite well for a potential move if demand starts to validate, or if MBs begin to validate. And the 6 hour, which would be my validation, also looks quite good in this case. So, everything kind of lines up now for a potential trade. Again, if basically an MB starts to validate and then a new MB comes from that validation, because that's oftentimes how prices get made, right? So what you'll see is, there we are. This can become another opportunity right here. So I'll actually take it just to get some more stats on the table in the event that it wants to take us in, just to show more examples of, like how anything in the trading in trading can happen, but we get in with the understanding of how trends are meant to theoretically deliver on markets that we assume and understand are likely to deliver bullish. So we'll wait. Price comes down and then taps us in beautifully. So there it is, a tap in. And again, same thing happens. We see this as like this down move here. You can draw it from that candle or from any other candle because again, it acts as an MB. And once again, we assume that hopefully the next candles want to move higher. So again, I can kind of do this like this. I can put it on top so you can see this. So here's your down move. Right now we're assuming the up move is coming. And we want to see it probably close somewhere up here, right, at some point, maybe over the span of at least this many candles, because that's going to validate demand. So we'll see if we can validate demand. So nothing happens, nothing happens, nothing happens. So, I don't like when the market kind of does nothing like this. It oftentimes is a bad thing. So maybe a 1 or 2 more candles will close. Yeah. I mean, it should have probably closed up here, but that's okay. Because again, like I said, I want to show you that as a trader, when you have proper rules, it's okay to just follow them as they come, take your trades, and then get out, right? So the reason that I assume that, this is probably going to fail down is because I'm looking at this as down move. The up move is forming, and the up move never makes a move. Honestly, I'd want to see it, kind of happen over this amount of time, probably close up here something, because then it's going to show you that demand's there. And this is just failure to validate, which led me to believe it's probably going to fail. And in a live environment, I probably would have taken a break even on this. But again, I'm not here to bullshit anyone nor make up things. So I just want to show you firsthand that it's okay to trade your system and take losses, because after all, you will make money in the long run. Okay. So this is another flush out now, right? And this flush out, and notice how this trade, this one that we took here, right? It was up around 4 RR. And we'll be able to reference RR later. Here we are. You'll be able to reference RR later for what that is. You can write that term down right now, but we will cover it later in terms of how it works for the risk side. But just think about these think about for now the -1s as -1% and the plus whatevers as plus those amount percent. So if I'm trading, an account, this -1 is -1%. This -1 is -1%. So, I've taken 2% in losses. I've also taken 2.3% in wins. Now, this is again flushing out. And again, do I know where this flush out's going to end, or do I know if it's going to start a new move down? I don't, right? Because again, as I said before, stage 1s and 2s are a general view of what a market looks like. And then we look to follow that as the market goes until the ultimate failure. We don't necessarily know exactly when a failure is going to happen. You're going to learn about what can create the precedent for an actual failure to occur, but we never know exactly if it's going to happen or not. So that's why we follow rules in the event that the trend wants to maintain itself, and then get involved with the rules as it happens. So again, as this is happening, right, I see stage 1, stage 2, stage 1, and I'm assuming a stage 2 is going to come from this. So for that to happen, what I'm going to need for price to do ultimately, right, is I'm going to need price to start making MBs to the bullish side, because that's what we expect. And then we'll see what happens with this trade here. But if it takes us out, then it takes us out. And I want to show you that because, again, I can give up 4% in gains because I understand that, I'm looking for trends. And oftentimes, if I catch the right move, that trend will last a very long time. So I'm looking for an MB now, and this from that flush out forms quite a nice MB. And another MB begins to form kind of on top of it. So happily look to enter that. Now, again, what you're seeing is I'm always entering after kind of an MB. And usually that's a rule that you can take down. And that's also a rule that you kind of saw a few times in the examples we provided where, some of the entries that I personally took, some of the examples I personally took were always off of some MB forming or proving itself and then taking it through that. And this is known as the double MB. You can write that down if you'd like. The double MB. We'll cover that a little bit later. But usually, all my entries and potential entries are on the double MB or after the double MB, which only simply means that some MB forms of some sort, and then I'm looking to take an MB higher or another MB higher or another MB higher, and I'm looking to trade these as the entries that then lead to either failures and you get small profits or larger profits if you took one of these trades, or that lead to trends that inevitably fail, and then you might make a very nice reward on your risk. So you might risk this much, and then you might end up making this much reward for it, right? And you get out somewhere here. So that's an example of a trade. So this is where you'll kind of be introduced to the double MB, and we'll cover that in a following section of the entry criteria soon as well, because this is often the way that you want to frame your idea or thought process behind entries. So this right here acts as another potentially nice setup, right? And again, same thing. There we go, something like that. Same thing, if we can get tapped in. Okay, so again, another tap in. And once again, as I'm looking at this, I'm thinking down move. This is starting the up move. Already at this point, it's not absurd of you to take your risk off the table. What I'm going to do is I'm going to wait one more candle. Okay, cool. So at this point, I would gladly move my entire risk off the table. What that means is that simply, just like this trade here, if price were to come back to this point or this point, I would be out of the trade entirely. Okay, that's all. Okay, and then the move looks like it just starts. So move this to the left. And again, all I'm going to be doing for this exact video today, okay, so again, another stage 2 begins. So you have a stage 1 into a stage 2. Then you had that stage 1. We anticipated the stage 1 because that's what we thought it was, because it started to flush out. Price started to move drastically against the move, or it flushed. And those flushes led to new MBs that started new stage 2s. And now these stage 2s, again, because the market's not perfect, which is a good thing, because the market isn't perfect and doesn't just simply move in the best little stage 1 and 2 like this, but instead moves more so in a market condition that's more akin to, well, where was it? Well, that's more akin to the stuff that you saw before, where was it? Okay, nonetheless, ignore that. Right, because stage 1s and 2s move in more sporadic ways where it's not always just a perfect trending structure like we said before, right, from the earlier parts of the portals where everything's just going to take you out, but instead trends truly move a little bit something like this, right? Because of this, once you're positioned properly and demand is truly in, then you stand to open yourself up to the greatest side of the profit so you can profit out and then let the price fail in the event that it wants to fail, okay? And again, this is that stage 2. So again, we assume that now this is going to deliver the market, right? It's going to deliver through a stage 2, maybe make a stage 1, stage 2, stage 1, stage 2. And as I promised, all we're going to be doing is we're going to be using the Ment Effects structure indicator, which you all have access to move our stops. So right now you can see the most recent low came up here. You can kind of see it with this faint gray line. Now, if you can't see that, I'll make it red for now. But I try not to have it eye fuck me, okay? But this is the low now, and the one right before it is this one here. So I can move this stop to just under there, or just leave it there because it's like basically the same. Whether I make 0.1% here or 0, I don't really care. And I'll move that one to the same area. So very simply, I'm now going to use both of these trades and follow them with these stops, okay? And again, the reason I'm doing this is, I could have just opened another chart, just like I did in the last few videos like this, and went, okay, guys, stage 1, stage 2, stage 1, stage 2, stage 1. And those stage 1s and stage 2s are made up of many 1s and 2s and 1s and 2s and 1s and 2s. And what you want to do is when you see a flush out, look to take the MBs, look to take the MBs. Instead of doing another video like that, which I could have done because you are learning a lot, I hope. Instead of doing that, what I wanted to do is I just want to kind of bring in a little bit of my personal trading, especially on something that I personally have traded, and walk you through my thought process, right, with what you have in mind now. So anticipation of the higher low rule, higher high, higher low, because you can go back, kind of pause this and look at it, right? A lot of these are meeting the rules we looked for. You have overall structured deliveries. Those structured deliveries lead to failures in structures, which become anticipations of the higher low for a buildup of another higher base time frame structure. Those structure buildups, right, that are happening are also partly stage 1s and stage 2s, stage 1s and stage 2s, because for the most part, that's how prices deliver. In the event that you're going to have a trending market deliver, it's going to move in a delivering format of 1 into 2, of 1 into 2, of 1 into 2. So before we proceed further with this exact example, I want to bring you to the rule, right? So this is where we're going to take a few steps back, as I promised, to put you 40 steps forward. And that's basically by thinking back to anticipation of the higher low rule, right? Which is basically this thing right here, which you're now seeing a few examples of already today. And you already have the actual answer to this. The anticipation of the higher low rule is not just like this on its own crazy special thing. It's actually just a conglomeration of a few things happening at once, right? And that's why you hear me kind of use a lot of these interchangeably as I show examples. But the anticipation of the higher low rule is also simply what we would call an accumulation, right? Because price is accumulating. In that area, those sellers are being absorbed by the buyers. That's an accumulation. It's also a reaccumulation, because a reaccumulation is nothing more than an accumulation, but a little bit higher up, right? Because oftentimes what price will do is it will accumulate orders, it will move higher, and in the event that it wants to keep moving higher, it will reaccumulate orders and it will move higher, which might lead you to the understanding, right? And within this reaccumulation, what can happen? Well, you oftentimes see the flush outs, right? That then lead to the new formations of MBs higher. And then as price moves, it makes some MBs up here that, hold for very little and then maybe fall down and then start new moves, right? So this is on its own another mini trade plan as I draw it for you, where an MB that happens a little bit higher out of that area, or those follow-up MBs, can act as mini scalps or faster base trades. So you can write that down, but don't worry about it too much. But this is a flush out rule right here, right? Which might lead you to the understanding that a reaccumulation, which is this guy right here, is also stage 1, because all that's happening, if you notice what we just drew here, is stage 1 into stage 2, stage 1 into stage 2, right? Which leads us to kind of the next mini point, which is that, it starts a stage 1 cycle. And we'll talk about what a cycle is a little bit later. It's not super crazy. Just think back to a very simple stage 1, stage 2, stage 1, stage 2, as that's its own cycle, right? A cycle can be 1 into 2, 1 into 2, over and over again. That's its own cycle, right? So, and those are examples of things you saw today. But what I really wanted to do very quickly is I wanted you to understand that the things you've learned so far and kind of putting a few of them together, you're actually learning the same concept interchangeably, but giving it a few lenses through which you approach it. Because trading is not just a one and done black and white rule. Trading is an understanding, which is why you're hopefully here, because you've now noticed that or learned that from your past or from the other stuff you've studied, and you're starting to realize that, hey, trading isn't just this buy when this indicator shows this or when this indicator shows that. Instead, it's an understanding of how are the orders coming into this market? What does the composite operator want to do with this? Is demand being validated, or are orders being built into demand? Is stage 1, stage 2, or the delivery of price happening in the way that I'm used to? And can I get positioned behind this? Okay. So this idea of a step back to take you 40 steps forward is to start recognizing that anticipation of a higher low rule is really just a start of an accumulation, which is also kind of a reaccumulation, which is also stage 1. And that sets the precipice for a trending market. 1, 2, 1, 2, 1, 2. Okay. That's what you're seeing here over and over and over again. And funny enough, that's where this idea of models also comes from. And what I mean by that is when you see something like, down here when it says accumulation or reaccumulation, that's kind of what you're measuring or what you're looking at. So yes, that's that. Nonetheless, let's get back to this example just for now. But the main thing that the purpose of this video was is, one, to show you this as a live example, kind of, and walk you through how these things happen and how it actually doesn't mean, and how you can sit and look for those stage 1s and not know exactly when they're completing, but look for those setups as they start to emerge. And 2, to get this understanding through, where basically anticipation of the higher low rule, or the thing that you learned before, right, is the same way as understanding or thinking in accumulation in stage 1 and stage 2. They're all part of the exact kind of same thing. And that's going to lead us to the cycle talk, which will be following this soon. Okay. Now, let's head back to here for a second, because we had these 2 trades still running. And again, back to the same old thing. I'm going to not make this red because I just don't like it red. I like it to be, honestly, I like it less seeable than this, but I'll leave it for you guys so you can actually see the lines. We'll just keep on doing the thing that we expect, right? Stage 1, stage 2, we expect this to now flush out. Or, as I just spoke about, you might see some MB start to form that last for very short periods of time. Like this one might last for this much and then maybe fail down, flush out, and then start a new potential move if it wants to keep going. So we'll see what happens. What you can also see is that a new low was created here. This moved up a little bit. So that means this one is where I can position both of these stops just below it, like that. Same thing, we wait. Same thing again, we can position these just below here. Because again, another purpose of this was to really cement in your mind that losses mean nothing, and you're going to learn about why soon, or as you're learning right now. You're going to learn how to properly do the data behind your trading, which you've learned in, and we'll see in the webinars as well as in the data collection section in the Discord. But I took these with flying colors. I didn't care. I had no problem with that. I was willing to take a loss here too and just take another trade after, because again, this is how the market operates. So we'll wait, see what this does. Again, it happens again. Okay, so I think based on what I remember from NVIDIA, I think this is about to explode from what I remember. So this is going to become unfair in terms of how good this trend became and how much money we would have made. But it really will cement the understanding that if you have a proper system to catch trends over enough time, and you take losses with no problem, you manage your trades, and you get into your trades with a general time frame template, which is what you've been given, you're stand to just gain an unbelievable amount. You stand to do very well for yourself. So again, this is your stage 1s and 2s that begin to become a lot quicker, right? So you have the bigger stage 1, stage 2s, and then those are made up of mini 1, 2, 2, 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, right? And again, I'd be expecting a bigger one, and that might be another opportunity for an entry. Or if you're a faster based trader, you might be even taking some of these tinier and quicker based ones to make your money, which is great because you're starting to also now see how a system is properly tailored to thyself, okay? So, again, just assume all these are being moved up like so, right? Just 1, 2, just moving it up with the most recent 2. That's all I'm doing, right? Another flush out comes through, a very minor flush out, followed by, again, if you notice this, an MB, an MB, and then starts a new move higher, okay? Absolutely beautiful. So we wait. Again, same thing happens. Move this up here. 1, 2, 1, 2. Crazy trend begins. So in this case, the crazy trend truly came into this market. So we just wait for another low to move to. There we go. Right. And I mean, already, a lot of you as you're watching this, and again, yes, I picked NVIDIA because it's something that I personally traded and I know it did well, but also because I really want to highlight how you're not here necessarily to take 1,000 trades so you can make all this money. If anything, once you understand that you could even trade 1 or 2 good trades like a year, it can it will completely change everything you do and the way that you think about trading, right? So you can still formulate beautiful systems with faster TPs, faster take profits, faster risk to reward, and take more trades, right? Some of you are going to be taking trades like this where you go trade, 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 and you take small ones and you take trade, lose, trade, win, get stopped out, trade, right? There's many trades and kind of opportunities that can work here because you're given a template to approaching markets, right? You understand how MBs formulate moves, and those MBs give you opportunities for entries, and then you're going to learn other tools that kind of work with them. But in this video, you're seeing how the anticipation of the higher low is formulating the initial step for an actual move, because before an actual move, the anticipation of the higher low begins. That's an accumulation. The stage one and price begins, right, through the MB validations. And as it begins, it can deliver in any kind of these stage 1, 2s that aren't perfect, but are generally cohesive, right? And you just keep going. Like, it's just nonstop. And I guess I didn't even know how good this rule would have been for following this trend. This is a rule, the one where you use this indicator for actual trends, that does keep you in a lot of really good trends and does so very well. So this is a rule I've shared with the team. Oh, well, actually up here, you have this, you flush into stage 1. So this can be an overall stage 1 into an MB1, and then doesn't really do anything here. Look at the 6 hour again really quick. Yeah, so I mean, it gets very extended here, falls off, starts building like this little area here. We'll see what it does on the 65. Okay, I mean, so it does come down. It builds like this stage 1. It creates this MB out of here. It creates this initial MB here and then this one. So this would have been an opportunity for a trade for sure, just depending on the person. Probably wait a little bit, right? Then this starts to form another MB1. This starts making an MB2. This looks actually really good, right? So again, kind of same idea. Same idea here as you saw before. Another MB that could be tradable. Okay, so this kind of thing I wouldn't actually be in, just so you guys know, because on the day, the way this works is that it gaps and opens here. So I would not have taken this. I would have waited now, and this just would not be a trade right now. Even if it goes, that's okay. All right, so in this case, you can see it starts going, starts making some MBs, and again, maybe we missed the move, or maybe it flushes out again, and then starts a new setup for us to take. All right, we'll see if we get an MB out of this. Comes down, moves higher. I mean, there's nothing out of this, right? Flushes out. All right, so now again, similarly, back to the thing we did before, right? You have the same thing, 1 into 2, 1 into 2, 1 into 2, 1 into what could be now a 2, right? So this could start a move, and then from there, you have this little stage 1 to 2, and then you're also now kind of setting up this. I would wait for some kind of clear MB here, see if we get one. Falls down, flushes. Looks like it's coming to take our lows here, and it does take our lows. Okay, so then at least we can record these trades. So this one and this one. And now you're gonna see kind of from this example why, learning to understand what the composite operator wants to do, and then following that move and trying to basically milk a move that truly becomes correct. It's the best system in the world. This is about 40.36, which is just stupid, right? Again, it's just dumb. And this is 34.42. So again, now you're also learning why, if you learn how to follow trends and catch trends and catch markets that move and get involved in them, almost with any system for management, you stand to do very well for yourself, and you start to learn that losses or break evens and proper management doesn't mean anything, right? Because now this one canceled out and made money on these ones, right? Or is it on these ones? And this one, these ones here led to 74 plus 74%, right? Because assuming that each one of these numbers represents a percentage, represents a plus 74% in that amount of time traded, okay? Using this specific EVC. So this video, again, like I said, is meant to be a little confusing. You might come out of this going, oh shit, whoa, that was, what was he doing? Because there's a lot of stuff going on, and that's good. Because now we can start to get deeper into it. And the purpose of this video is to show the same examples that we've kind of looked at before as a live example, and to also give you the foundational layer that this anticipation of the higher low rule in a bullish base market that you've learned is actually simply, understanding wise, an accumulation, a reaccumulation, a stage one to start a stage two, to undergo stage one to two, stage one to two, because all of them are met with the same thing. Also following like what is a flush out, right? So again, same thing as a flush out into a new move, right? So these are all the same thing as you see fit. Now that's not necessary. It's not necessarily a flush out, just because a flush out could lead to a failure. But for the most part, these are all kind of they're the same thing once you understand that, right? And that is a few steps back to put you 40 steps forward for you to start recognizing